Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index dropped sharply below the 100 level last week as signs of a cooling labor market boosted expectations for a Fed rate cut in December. The dollar weakened after failing to break 100.36 earlier in the week, extending its retreat below the key 200-day moving average. Traders leaned on private data after government reports were delayed. Rate cut odds rose to 70%, adding further downward pressure on the greenback. WTI crude traded lower last week, fluctuating between 61.3 and 58.75, pressured by a stronger US dollar and rising concerns of oversupply. Prices fell 1.64% for the week to 59.7. EIA data showed US crude inventories jumped by 5.2 million barrels, reversing the previous week's drawdown. Still, reports of possible US military action against Venezuela and reduced Russian exports offered some support. Gold prices hovered around $4,030 per ounce last week. Caught between opposing forces, a weaker dollar and revived safe haven demand lent support, while broad equity sell-offs limited gains. Investor anxiety over the prolonged US government shutdown and uncertain data boosted safe haven flows. Challenger's layoff report also fueled bets for a December rate cut, which could lower the opportunity cost of holding gold. Yet, as US equities plunged, profit-taking kicked in, reminding markets that gold often moves with broader risk sentiment. After 2 weeks of gains, yen pulled back slightly last week, touching near 10-month highs around 154.49. Weak household spending in Japan and Prime Minister Sanae Takaichi's pro-stimulus stance are seen limiting the Bank of Japan's appetite for tightening. While talk of government intervention to stem yen losses continues, traders remain cautious. The euro rebounded from a 3-month low near 1.1468 last week as renewed labour market worries weighed on the dollar. Challenger data showed over 153,000 US layoffs in October, intensifying talk of a Fed pause. Meanwhile, comments from ECB officials suggested little urgency to adjust policy. Vice President Luis de Guindos said he was comfortable with current rates and remained cautiously optimistic about services, inflation and growth, helping the euro hold steady against its major peers.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.